If you want others to persuade you into believing, Goldman Sachs, financial stations, talking heads, welcome to RJTICharts.com. Our algorithms say if you want to let some of the most prestigious Wall Street firms out there convince you that the Dow, S&P 500, NASDAQ isn't subject to move lower, and especially the Apple company, we just don't know how to say it any other type of way, but we will try. I think that Apple deserves a lot of credit for all the positive impacts they have made in society. And who can argue with their future? I mean, they have the Apple car coming and more newer innovations coming, I guess. So I want to say that in the midst of them being able to figure out ways how to continue to milk subscriptions from music, phone, laptop, computers and iPads, accessories, TV subscriptions, credit cards to make fees off of, and soon to come the milking of its subscribers to purchase their cars, and God knows what other ways they will find to engage followers for the sake to create other revenues. But one might think after this description, I just might have a vendetta or a dislike for Apple company, and this could be furthest from the truth. Apple is a great company. But I do want to point out that it's just that, a company, and is not immune from trouble or declines in its stock value just like any other companies like Amazon, Google, Nvidia, Regeneron, McDonald's, and many more. But you have so many out there who think that Apple is some piece of safety net. And many of these companies like Goldman Sachs tell you to buy Apple. But if other markets fall, and yes, the Dow, S&P 500, NASDAQ, and more are going to fall, and some of the most prestigious firms on Wall Street, some of the top fund money managers, the caliber of a Warren Buffett and more, will have to explain to these same buyers that are running in at $150 a share or even higher why they are suffering a 20 to 35% drawdown from the decline of Apple. Before you question us and our credentials, let us provide you with why we can question many of these amazing companies on Wall Street that led with ideas to buy Apple now. We'll start with 3 reasons why we can speak. This chart is back in year 2022. The red dots represent sell signals, right? All of the year's 2022 sell signals were generated from our algorithms. But let's dig a little bit deeper, because the year 2022 we just revealed just might have been luck. How many forecasts before the year of 2020? COVID-19? Let's read what it says, yellow, red, and green. We get it. This was on January 24th, 2020. Apple closed at $318.31. We get it. Nobody wants to miss out on this high flyer, especially since the top 5 holders of Apple we mentioned last year are making millions, if not billions. Like, for instance, Warren Buffett is one of the top 5, and BlackRock, Vanguard. But even these gurus just don't see what's coming. And when they get wind of the black swan, to hit the average to professional, it's going to wish that one could have waited to re-enter at $200 a share. Yet, buying continues, and there's no indication of the pain that is at hand. And many will come to learn a powerful lesson, not only in Apple, but the market overall. We understand that Q1 earnings is coming out for Apple, and it may just promote even higher trade and extremely more buying. If so, and as such a rise occurs, only adds to a demise. And buyers who jump on board, like so many have since the $200 level, will come to be reminded of when one thinks that a company is invincible to never fall into such a mind trap again. Are we forewarning? You're darn right we are. But you don't have to believe us or hear us, for when the time comes, you are going to reflect and know that we told you that we were on the verge of making history again, like we did in the year 2018 call, which equaled somewhere around a 40% decline. We understand that 5G is the next gas injection for Apple, but this isn't about fundamentals for us. It is all about the utilization of our powerful algorithms that caused 2008 declines, low historic treasury yields in 2014, etc. Was a projection before COVID-19 amazing? So as you can see, we just might understand when it's necessary to sell, or at least warn when a down is coming for Apple, regardless of what some of the most renowned investment firms on Wall Street might be saying oppositely. Especially a CNBC TV personality who was telling you to buy in January 2020. But although we can go back to the year 2017 and further, we will show you just one more. This is September the 4th, year 2018 chart. We sent out. The red arrows to the right illustrate our projection. So this is what happened afterwards in the year 2018. Apple plummeted. Hopefully, you've seen why we're capable of saying when to sell Apple, regardless of others. In conclusion, Apple is to fall because the Dow, S&P 500, NASDAQ is earmarked to fall. Our outlook derived from our algorithms. The same algorithms that gave us the reasons to message in the years 2018 through 2022 to sell, or at least understand that sell was coming. We completely understand that it's your money. And we are advising you to follow your own investment ideas and investment advice. For us, we're eager to see if our algorithms are going to be right again. The real question is whether our algorithms see what others can't see coming. And answers not available today are to show up at some point tomorrow. To contact us, info@rjticharts.com, 888-521-3555. Get your Ramo today. Get your equity subscription today. RJTICharts.com, driven by infinite wisdom and its proprietary trading systems.